Okay, welcome back, everybody. We've got everything straightened out and we're ready to get started. So our next panel is on rural banking and access to credit. Many economic and community development efforts hinge on having locally accessible banking and credit options to help businesses grow and develop, to help individuals build wealth through home ownership, or to help finance community investments. Recent trends in the banking industry leading to branch closures and consolidation have raised concerns in rural communities about access to credit and its effect on community development. Our panelists today have an incredible depth of experience in issues across the spectrum of rural lending to support community and economic initiatives, and will share their experience and insights. So first, we're going to start off with Anthony Tarnasky, who's Senior Vice President and Commercial Banking Team Lead at Columbia Bank. And we were excited to be in your neck of the woods in the Dalles, and we're glad that you were able to join us now that it's a virtual workshop instead. But we're looking forward to hearing your thoughts on community banking in rural Oregon.
Absolutely, thank you. I think that there's a lot of opportunity in rural Oregon, and Columbia Bank is certainly committed to its rural branches, so I look forward to the discussion today. Thank you.
Great. And then our next panelist is Elsie Meeks, who has more than 25 years of experience in Native community development. She previously served as South Dakota State Director for USDA Rural Development and is currently the Board of Trustees Chair of the Native American Agriculture Fund. Elsie, do you want to go ahead and give us a little bit of a background on your experience and where you've worked and what you're bringing to the conversation today?
Sure. Yeah, so for the last, really, 30 plus years, I've been involved in economic and community development, primarily in Indian country, and specifically, too, on the Pine Ridge Indian Reservation in South Dakota. And we started the first Native community development financial institution at Pine Ridge. First focused on micro lending, and then it now has, that many years later, is a small business lender. And then I ran a national organization that helped tribes and Native communities nationally start similar organizations. And so there were a lot of lessons learned from that, because really CDFIs, the one thing we found is that, they really, reservations are normally high-risk areas to lend, first-time lenders, first-time borrowers in many cases, and first-time business owners. So it's really high risk, and banks just really can't take that kind of risk on. So they have been the most successful vehicle to allow tribal members that first step into business. And they also do, housing loans, a lot of whatever their community needs. And so I can talk about that a little bit more later, but I just really wanted to focus on the Native CDFIs and, what they've done in the country. There's about 70 of them Native nationwide, and about 35 of them are in the western states. So they're having some real impact. So I'll stop there and hopefully have a chance to go on a little bit more later.
Great, thank you. And then our final panelist is Lisa Smith, who is a longtime microenterprise advocate and the executive director of Washington State Microenterprise Association. And in that role is, of course, dealing with the impacts of coronavirus on small businesses in Washington State. And so we're looking forward to hearing more from your perspective on what you're doing, what you normally do, and what you have been doing in the past couple days to help with that situation. So go ahead, Lisa, and give us a little background.
Great. So good afternoon. First of all, thank you so much for the invitation to participate. I'm fortunate to have been able to work with the smallest businesses in Washington State for over 20 years. And the role of our association is to support and provide resources, grants, and other kinds of technical assistance for our members who really focus on those small businesses with 5 or fewer employees. So that's over 400,000 of them in Washington State. And every Western state is, the vast majority of businesses are these small, under 5 employee companies. And so our members provide the training and the technical assistance they need to grow, get stable, transition, but they also are microlenders. So they offer microloans generally up to $35,000. And so our association is really about helping these microenterprise development organizations around Washington State get the resources they need, the technical assistance they need to support those smallest businesses, many of whom are owned by people with limited incomes, people with disabilities, people coming out of prison, but also veterans and farmers and food cart vendors and piano tuners, dog trainers, web designers, all of those small companies that almost every community has. So, our hope is to continue to work in rural communities as effectively as we have, and then, of course, partner with other organizations like ours in states, in the Western states. Our closest counterpart is Cameo in California, but I'm available and would love to work with any of you if you have any questions. You can reach our website at wamicrobiz.org or WAMICROBIZ.org. Okay.
Thank you, Lisa. All right, so I'd like to get into some questions with all of you now to help us understand sort of where the challenges are with rural banking and access to credit, and how you think that states and governors should be addressing those issues. As we heard during the last panel, for many rural communities, the challenge may not be a lack of resources so much as it is a lack of capacity to absorb them. So this could be a lack of technical expertise or coordination to create economies of scale. How do your organizations try to address that and increase the flow of investment to rural communities?
So this is Elsie Meeks again, and I hope it's okay if I just jump in, because I actually
Please.
was remiss in not mentioning and talking about the Native American Ag Fund. And it came into existence just 2 years ago, and it came out of a lawsuit that Native American ranchers and farmers brought against USDA. And after many years of litigation, USDA finally settled the case. And at the end of the claimant process, there was $280 million left over. Their claimants had died, and or it was their parents that were discriminated against, and people didn't know to apply or to be a claimant. So there was $280 left over, and the Department of Justice and the federal courts and USDA agreed that we would set up a foundation and to address, this issue of lack of credit. And so in the trust agreement, it was one of the organizations we could lend or grant to was CDFIs. And, it's so important. The CDFIs is just, they've provided technical assistance, especially the native CDFIs. They've had to do a sort of holistic approach, help people start understanding savings and checking and business development. And in the case of the Native American Ag Fund, they're also providing technical assistance to ranchers and farmers and other ag. And in the West, in the West, aquaculture also is in that. So, there's just a few of the CDFIs at this point that do provide ag lending. Most of them have been focused on business lending. And so, we're just kind of moving down that path right now. But, nationwide, CDFIs have just done an amazing job. There's non-tribal or non-Indian, there's about 1,000 CDFIs nationwide, and they manage about $185 billion. And so, they've really had a lot of impact because they're lending in these communities that really where banks haven't been able to lend because of the perceived risk and the regulations that banks face in lending in those communities. So I'm happy to answer any questions about that.
Thanks, Elsie. Anthony or Lisa, do you guys want to weigh in on that topic of how to help people and communities access the resources that are available?
This is Anthony.
Sure.
I'll talk about it. We currently are located in both rural and more urban markets. However, we've got a significant portion of our portfolio in agriculture, as well as small business lending in the rural markets. What we found is partnering with various government entities has been very beneficial. We locally have independent community development groups. Here locally in the Dalles, it's Mid-Columbia Economic Development. We work in partnership with them on specific small business lending needs. In other infrastructure type of environments, we often work with the USDA for water development projects, for municipalities. We in Oregon are lucky to be able to partner with Oregon Economic Development. Now it's called Business Oregon, to structure small business guarantees that also do target the more rural markets with more liberal guarantee requirements and so forth. And then we also pride ourselves on community involvement and educating the local populace with financial education opportunities throughout the year. With workshops, we go to the schools, we provide some learning at the schools, or teaching for the education, I guess would be a better word, for the younger generation that's coming up and going to be our future business leaders. But that ability for us to work and act as a liaison between the USDA or the various entities out there is something that we pride ourselves on, and we believe does greatly enhance opportunity for rural business development. Any questions on that?
That's great. Thank you so much. Lisa, did you want to weigh in on that at all?
Sure. I'll just, I agree totally with Elsie Meeks and also and Anthony. Our work really is to develop and strengthen the ecosystem in every community that's serving small businesses. So like Anthony mentioned, our members often get USDA rural development funds through RMAP to provide small rural microloans. Our members partner with the Chambers of Commerce, the Small Business Development Centers, Economic Development Councils. Many of our communities, our partners connect with community colleges for ongoing education. Libraries are essential partners for us in rural communities. In many parts of our state, there is no broadband. So to get your product to market, it's really very difficult. So libraries who have that broadband access are really a lifeblood, support for these small businesses. We also, our members work really closely with workforce development. In so many ways, self-employment is a workforce development strategy. I know that sounds crazy, but a person can go get a job, or they could go get self-employment training to start a small business and create their own job with a small business. So we work really closely with workforce development. Community banks, as Elsie mentioned, CDFIs are essential in this ecosystem, as well as governmental agencies. So when these partners work together, accessing funds is easier because you have natural partnerships, so that funder sees that money being provided in a grant or whatever is extended further than just that one entity. So like HUD funds through CDBG is a part of this funding network, the small business at the SBA with our small micro lenders, EDA provides support, CURB funding in Washington State. So I'll just say that the ability for small businesses to access the funds they need to grow is often predicated on how effective partners are working together. I hope that made sense, but it really is a we notion as opposed to, you know, a solo organization trying to accomplish everything on their own.
And to that point, I mean, of course, CDFIs do ask banks to participate with them on loans. But, you know, for instance, you know, stepping away from small business lending a little bit, but going to housing. I mean, when I was at USDA Rural Development, and you mentioned I was the state director, you know, housing in every community was such an issue. You know, the stock of housing was you know, deteriorating, or it just wasn't there. It's particularly true on reservations. Most of the housing efforts on reservations have gone towards low-income housing, but really finding housing for, you know, employees is such a big issue. And, you know, at USDA, at Rural Development, they have a wonderful program. It's called the 502 loan program, and they partly through that, they make guarantees through banks, and I'm sure, Anthony, that your bank probably participates in those. But also they have a direct loan program, and that just has been, it was so hard for, I mean, the employees of RD actually themselves would go out and make the loans. And, you know, South Dakota was doing more, twice as many as any of the other states, and we had done like 2 in the 1 year. And so, you know, we formed this coalition called South Dakota Native Homeownership Coalition, and it's been going strong. In fact, doing things like getting inspectors trained, getting contractors trained, you know, increasing the lending that goes into, you know, and the hand-holding that goes on, home buyer readiness, credit counseling, all of those things. And in fact, because the direct program has had some issues getting the money out in the communities, we actually proposed a pilot to USDA, and that they would take a chunk of that money, actually it was $2 million, and as a pilot program, use 2 of the native CDFIs in South Dakota that did mortgages to see if they could lend that out in a more efficient way than USDA was, Rural Development was. And it's already had, you know, an amazing effect. And so we don't know where that's going to go if, you know, on those kinds of programs, if the government will start looking to the native CDFIs to really get those loans out on the ground. Because it takes, you know, it's a grassroots, community-driven effort. And so that was just a really important thing that we've learned, and important milestone that we felt like.
Great, thank you so much. So I wanted to, in light of the coronavirus and the impacts it's having, I wanted to turn to that and ask you all, what do you think are some of the most urgent economic impacts that are going to be affecting rural communities, and what steps can be taken to mitigate those impacts?
This is Anthony. I can address what we're doing individually. You know, it's a very difficult question in that it's so fluid and there's so many questions going on at this time. However, the banking industry is considered an essential industry. So we continue to be open, have access to capital, have extremely strong balance sheet and ability to lend. We're currently working through a process to streamline potential skip payments or payment changes for our local borrowers in order to accommodate them through this hopefully short-lived period, especially in small businesses such as our hospitality, restaurant, bars, different things like that, that are essentially shut off from being able to do their daily business. It's certainly a significant concern and something we've been addressing very proactively by contacting individual borrowers, seeing if there's something that can be done. In addition, I know that right now there is some significant strides being made for some emergency funding out of the Small Business Administration. This is very, very fluid right at this moment. However, in the next 2 weeks, I would say, I anticipate significant guidance coming from the SBA, allowing for microloans to help people weather the storm. The difficulty is going to be if they take on a significant amount of debt, how that will impact their ability to operate in the future, given the tight margins sometimes seen in those industries. So far, the agricultural industry here locally has held up very well. While we've seen significant price drops in cattle, some of our other food products have certainly gone the other direction with the increased demand from people storing things. And one thing that hasn't been brought up that hadn't heard before is the significance of the FSA in lending in rural America, especially to our farmers. And their guarantee program is probably one of the easiest to deal with of any of the government-sponsored programs that are out there. And they've committed to also be very on top of this with the fluidity of the situation. So it's a tough time, but we're all, I think, coming together and working the right direction to be able to help out our small businesses.
Yeah, and just to follow up on that, this is Elsie again. I know that the administration is looking at, on the direct loans from FSA, on how if they can defer payments, which, in the disaster legislation that came out in the past, they could. One of the issues with that, though, was they deferred the payment, but then they didn't extend the term of the loan. So I think they're trying to address that. And again, USDA is actually looking at, how CDFIs can be more effective, with more flexible lending. So, I think they're really looking at that right now. I know they are. And again, it's, as Anthony says, very fluid. One thing, the Opportunity Finance Network, which is the association of CDFIs, was asked to provide, their input, and they're asking for $1 billion that would go to CDFIs. Now, whether that amount really happens, the ask is out there, and Treasury, which is where the CDFI fund is housed, is very aware and are, willing to figure this out too.
Yeah, this is Lisa Smith. I would just say, this has been an unprecedented impact on businesses, let alone our lives. But, the most important thing right now is just making sure that business owners and their employees are safe and they're healthy. So we basically, we've had statewide closures of our schools and restaurants and bars in Washington State. I want to send a shout out to Governor Inslee. He has been an incredible leader in our state to, address the, lack of testing for the coronavirus, but also really marshaling every possible resource in the state to support people at work and people now who are at home, as well as supporting businesses. We also have an incredible leader in our Commerce Department. Dr. Lisa Brown has also just made sure that agencies are connected and coordinating and supporting businesses. I'll just say that, in the last 4 days, we've been involved in several conference calls. The SBA also just has been working day and night to ensure that small businesses are able to access loans, especially EIDL loans. These are the economic injury loans that are now coming out where I think, there's many cases there's no collateral required. There's an extension of payment terms. These are loans directly through SBA, so there's no intermediary. There is support for the smallest businesses, so our members are kind of on the front lines in helping businesses apply for these EIDL loans. I'll just tell you one story. We have one of our members is a microlender. They're an SBA lender. And if you can imagine that in a month, normally before the coronavirus, they were receiving, about 120 or so inquiries about microloans or accessing a loan. And they would close maybe 25 loans a month. But just in the last week, they have received 400 inquiries for loans and have closed 50 SBA loans in that time, in 1 week. So if you, I don't know how all of your states are managing this virus or whether you're facing closures of all kinds, but in our state, bars, restaurants, workout centers, hair salons, everything's closed. And so there is, real risk in people being able to pay their mortgages, pay their employees, and these loans are designed to be low interest but forgiving in terms of the terms that are available to borrowers. And so we're just working, tirelessly to make sure that our members and the businesses they serve are able to weather this. And, we really don't know how long this is going to last. So working together very closely, very collaboratively is the bottom line, is what we need to focus on.
Thank you, Lisa. So Elsie and Anthony, you guys both talked about working with federal programs to partnering to fund different kinds of, I think Anthony mentioned infrastructure. And Elsie, from your previous experience as a state director in South Dakota, I was wondering if either of you wanted to talk about kind of the ease with which folks can partner with federal funding sources. Is it easy enough? Are there improvements that could be made that would help get more funding out the door to the communities and people that need it? And so I would love to hear from your experience present day, or Elsie from your time as the state director, any insights that you have on that.
Sure. Well, it was a new experience for me working as government. As a CDFI, we had received rural development funding quite a lot, whether it was the RMAP or the RBAG, Rural Business Enterprise Grant for technical assistance. We had done a housing project and used their water and wastewater programs. But it can always be easier in my mind. The guaranteed 502 loans that the bank makes and the rural development guarantees them are fairly seamless. There's always the regulations that go along with it, but I think most of the banks that utilize that have learned how to manage that. But on the infrastructure, it's just you have to have your engineers. You have to really have your ducks in a row. Each community does, and especially for Native communities, they're just structured a little bit differently in some cases. Sometimes it is a housing nonprofit that's trying to develop a housing project, and that's a lot more difficult than a municipality or a water district accessing those. So I don't know, Anthony, if you have something you can add to that.
Well, the only thing I'd add is with regards to affordable housing, it really gets frustrating for a lot of the developers that we deal with, that the cost of going through the various tax credit financing programs for either multifamily or low-income housing generates per square foot charges that are so far above what they see in their ability to generate regular non-guaranteed housing or regular, I guess you'd just say, more traditional financing methods. It's not uncommon to see even up to a $50 or more per square foot additional cost to go through those types of programs. And I think when a lot of people start on the various low-income housing type projects, they're very surprised at the overhead and costs that goes into meeting the requirements for those programs. And it can be frustrating for people, but unfortunately that's the way the programs are currently written. The bureaucracy requires significant additional investment.
And I would like to add, I also serve on the Federal Home Loan Bank of Des Moines, and that it has its affordable housing program, which, we're always grateful for the banks that it has to come through a bank, a member bank, and it's, for affordable housing projects. And it's quite a wide range of things it can be used for there. But, again, it's the banks, and we're really grateful for the members that do apply on behalf of, they become sponsors on behalf of, a housing developer, whether private or nonprofit or whatever. And then the bank also has the down payment assistance program. Mm-hmm. And that also, I assume you participate in that as well?
I am primarily in commercial and small business lending. That's my day-to-day job, but as I understand it through our mortgage origination division, we do participate in that.
Yeah, I'm sure that you do, and many banks do. The affordable housing program, by statute, all the banks have to set aside 10%, at least 10% of their net income that goes towards affordable housing. And so some of that can be used towards, construction or rehab. But the Des Moines Bank, which also includes, all of Oregon and Washington, and this Federal Home Loan Bank of Seattle merged with Des Moines after the housing crisis. And, we set aside 20% of our AHP for the down payment projects, because that really does, benefit individual homeowners or potential homeowners. We wish we could set aside a lot more, because that is just, it gets used up so quick, and banks have really liked that product.
Yeah, I'd agree with that, absolutely. And I know that we value our relationship with Federal Home Loan Bank tremendously, and they are a huge source of capital, especially for community banks who are focused on small business and rural lending. They're a lifeline in a lot of ways for providing capital access to the banks to be able to fund those loans.
Yep, our number one goal is to provide liquidity to community banks.
So I guess I would like to pull back a little bit and ask, obviously, Anthony, you're representing a community bank, which is still serving many rural communities, and Lisa, you're covering the smallest of businesses and helping with those, helping your members help them with smaller size loans. And Elsie, of course, you're representing sort of the CDFI perspective, what are the gaps that still need to be filled? Or does it vary regionally, depending on, what institutions are in different areas? But if you were looking holistically at rural communities across the West and issues around access to credit, what do you think is the biggest priority that the governors and states should be trying to address?
Well, I can take a shot at this. Our association has been working with our legislature and the governor. We know that when small rural businesses have access to training, technical assistance, and small loans to get started, they grow. And when they grow, they hire employees. When they hire employees, there's more tax revenue, which helps small communities stay healthy. And our members are kind of different in that ecosystem. So we're so grateful that we have SBDCs who provide that one-on-one counseling with businesses. Economic development councils help businesses grow to those larger stages. But what we were fortunate to be able to do is our legislature has invested in WSMA to really focus on rural communities and helping organizations like our MDOs to build their capacity to provide training, technical assistance, and microloans. Because to get started without the training and the technical assistance and financing, it's just really hard. And we all know the number of businesses that have started without that kind of support and have, lost their life savings. It's just devastating. But when they do have training and support, they do have access to these networks of ongoing technical assistance as their small business grows in that life cycle. It really does matter. And so if I had a magic wand, I would encourage every state to really invest in microenterprise development organizations and economic development councils and those entities that are providing the services to the smaller businesses, because they do grow to the next stage and become those stage 2 companies where, they can hire their own technical advisors. I also just wanted to say that during this time of the coronavirus, we really have to think innovatively about how to help businesses respond and how we can pivot and be more agile in our ability to support them. So, in a matter of days, several of our partners had to convert from classes at community centers and libraries because they were being closed and had to transition to online classes. And so that's been happening, and that's an innovation that we probably really wouldn't have gone to had we not had to face this crisis. And it's all well and good if you have internet service. So the next most important investment I would hope state legislatures and governors address is the really terrible situation many rural communities have in accessing the internet or having broadband, because it cripples businesses and their ability to sell their goods and services. So those would be two critical investments I would hope that our state policymakers would invest in.
I completely agree with Lisa on those points. It's the technical assistance, and in all sectors and across the state, in rural communities, all of them need technical assistance and good internet. I would say on reservations, it's even more acute. When we first started lending at Dakota Fund, we did a study after we'd made about 100 loans and found out 85% of our borrowers had never had a savings or checking account. And, virtually none of them had been in business. And so, and 75% 80, I don't remember now exactly how many hadn't had a loan, but it was up in the high three quarters. And so, providing the right kind of technical assistance, starting with financial literacy and all of those things. And, as reservation economies grow, that takes the burden off of the state government and tribal government.
Thanks, Elsie.
Anything? And we're certainly very, very diversified in our areas, with the Portland metro market, we have the Bend market, and our presence in Washington, it's kind of the same thing. On the east side, very rural, west side, much more urban. I'd concur that the SBA DCs are invaluable tools for promoting small business growth, but one area we've seen tremendous growth in is the income in the communities being generated through non-traditional work environments, specifically people who've moved into the area who work remotely, oftentimes with Silicon Valley or an urban or a more urban type of an environment. So I would echo the need for broadband in these more rural communities, and we can see it in various communities within our Eastern Oregon. Those who've invested heavily in broadband have seen significant influx of new people moving into their communities that can work in those non-traditional roles, whereas those communities that did not invest in that additional broadband access, they simply are not an option for those types of people to move into those communities. And as we know, population with good earning jobs provides opportunity for the rest of the community. So I would echo the broadband need as being probably a priority number one for these rural areas.
Yes,
and we just
agree with that. Go ahead, Lisa.
Yeah, I just want to add one really quick thing. So our association, WSMA, provides small grants. They're only $15,000 or $12,000. But, with a small grant, a community up in Colville, which is in the northeastern part of our state, was able to convert their lending platform online. So they have one loan officer who drives to these small rural communities in these very huge rural western counties. But within 2 hours of this funding getting to them and then having this online lending platform up and running, they had an application for a loan. So that the time and the leverage of that loan officer is way more efficient and effective. So these small loans, these small grants, although they are small, in rural communities with the right partners, they can really leverage significant impact for the small rural businesses. And I just wanted to tell you that story. We have so many stories, but that was one that's pretty sweet.
Great, thank you. So I do have one question from a participant, and that question is, are community foundations supporting your efforts in community and economic development?
Well, I could say, just this Lisa Smith, yes, community foundations are often on the kind of the bleeding edge of change in communities. And I know that our state has focused on, I know that the Gates Foundation has helped community foundations fund programs that are addressing emerging needs. And what they've been able to do is not define what nonprofits have to produce in the beginning. They have to have all the answers, but they're providing foundation grants to organizations to do this innovative work and asking them to pay attention to what's emerging so that the nonprofit doesn't have to know exactly what the outcomes will be, but are more agile and effective at noticing what really comes next. And community foundations are essential in many of our communities.
I would say, in South Dakota at least, I mean, they are, being on the bleeding edge is probably a good way to put it when Lisa said that. I mean, they have certainly participated with CDFIs, but, you know, it seems like they're so, you know, they're spread out over so many different areas that, you know, to have significant impact. You know, but some of the regional foundations, like Northwest Area Foundation, for instance, has been, you know, they're a big supporter of native CDFIs because they see the impact that these native CDFIs have. So they may fund a loan loss reserve fund or technical assistance or even, you know, program related investments that provide capital. And I would say if there's one thing that, you know, CDFIs lack, is really enough capital to make a big difference. But I think, you know, the Native American Agricultural Fund is really trying to partner with Farm Credit Administration, for instance, and, you know, working with them to figure out if we can set up a loan loss reserve that will allow Farm Credit to take some of the risk out of it for Farm Credit, making loans to ranchers and to into agriculture. And because they have, you know, they have lots of money, the Farm Credit system does.
Okay, great. Thank you very much for those answers. And I think you guys kind of started touching on this, and now I'm asking questions out of order. But to go back to this question, is technology, where there is broadband, and we all know that that's a huge priority in rural areas, but is technology providing an adequate substitute or, you know, a reasonable substitute for in-person services in rural communities? And are there any issues that you guys would point to there, and how that's rolled out and how to make that effective?
Well,
No,
Anthony,
go ahead.
I'd say,
Yes.
oh, sorry. I'd say it's completely a mixed bag. I mean, certainly for our farming communities, you know, there's been huge advances with technology and the efficiencies that they can do in their operations. That said, the local store owner down the street with Amazon and alternative Walmart.com and alternative things, they would say that technology's been absolutely devastating to them. So the fact of the matter is it's a mixed bag. It depends on where and who you are. But even just like in the urban markets, in the rural areas, you know, evolution occurs with technology, and that's just the way things are. Certainly for a lot of my small business niche type customers, it's provided opportunities that they never would have imagined in the you know, the various technology to communicate between here and perhaps foreign investors or foreign suppliers has certainly benefited from the technology side of things. So, you know, I just step back and say it really depends upon the perspective of the individual who's commenting on their experiences with whether it's been good or bad. But what we have seen is with the influx of the ability, like I said earlier, of people to work remotely, that income has increased with the new populace has certainly improved a lot of these local areas. You're seeing downtown revitalization efforts and different things that, you know, 10, 15 years ago, it was going the other direction. So I still think the benefits outweigh the alternatives.
I mean, I would agree with that. I think it is a mixed bag, and that's a great way to put it, Anthony. But, you know, I think, for instance, I mean, I live on a ranch in southwestern South Dakota, and it is really tough to get into the bank. And our little community bank has really good technology anymore. So, I mean, and or if I use a different lender, it's almost, all my payments could be made online. That is just huge when it comes to these, to the very rural populations. But again, I'd be interested in what Lisa says about the impact that Amazon and Walmart and all of those have had on the smaller rural businesses on Main Street.
Yeah, well, that's a very expensive question. It would take a long time for me to give my full answer. So I'm gonna move just a little bit to the left of that and say that we have learned, our members have learned that rural entrepreneurs actually do value coming together in classroom environments to learn with each other. We thought initially that it would take too much time. They don't want to spend the energy. It's too complex to learn about cash flow projections together. But truly, connection is important, especially in rural communities. And so what many of our members have been able to do is, and maybe not now in the coronavirus age, but to really mix in-person, online, Zoom, and other kinds of platforms to provide this support through emerging technology. And also those platforms that enable people to sell their products online so they can package them up at their local post office and get them shipped all over the world. And that just wouldn't be possible without technology. I wanted to also just echo Anthony's comment around remote workers. If they don't have broadband, it's just going to be harder. But the remote entrepreneur is really a critical piece in this conversation, part of this conversation, because they do have the ability to transform a rural economy if they're able to grow, and they can grow with technology. What we know, however, is that often people of color, people with disabilities, and others are disproportionately suffering or at a disadvantage because they don't have access to these technologies. And our members, many of them, are working to address that disparity because when everybody has access to this technology and these resources, everybody is going to be able to grow. And so that's just one critical part that's a priority of our members. The other thing I was going to say is that two of our members really focus on building companies with a triple bottom line, the bottom line of profitability, the bottom line of the business's impact on the planet, and then what the social bottom line is. And more and more companies are shifting in rural communities to make sure their products and services are really conscious in those ways. And technology has helped them get to that place. And I will talk with anybody if they want to learn more about that. But those are the thoughts I had.
Great. Well, thank you, Lisa. And thank you to all of our panelists. I think we're going to go ahead and wrap up with this one and start segueing to our next panel. We really appreciate you sharing your thoughts and impressions on how economic development is working and what can be done better, and how to support small businesses in this time and all the time. So thank you very, very much for getting on today and sharing your thoughts with us. We're going to go ahead and take a bit of a break. So we'll start the next panel, looks like at 3:30 Pacific. If you are a panelist for the next one, sit tight, and Kevin and I will start promoting you guys to presenters in just a couple minutes here. Thank you very much.